The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, of course, 15th of November. And very interesting market. Interesting the way there's a rotation through different sectors. Today the NASDAQ's up, Dow's down. What a market. Dow's down 31 at 18,836. S&P is up 8 at 2172. Comp index is up 46 at 5,284. Gold is up $1.40 at $12.23. Silver is up 13 cents at $17.03. High-grade copper is plunging back down to the 2.48 level, minus 4.05. Crude oil is up $1.67 at $44.98. Bonds are up 7/32 at 1. Bonds are up, at 154 and 21/32. And the dollar, our wonderful dollar, is at the 100.21 level, up 9 cents, within fractions of making that leg D in the monthly chart. This is why today's so interesting. And boy, you had some really great shows earlier on from 8 o'clock this morning, and hopefully we can keep that standard up here at TFNN. Let's look at the E-mini, up 850. What's really fascinating about this is that the low that was made overnight, a week ago, Tuesday night, going down to 2028, actually it was just a tad past midnight, 20.28.50. Look, here's the candle that went straight up, and we went to a higher high, and we are hopefully closing today above the high of the 9th of November of 2166.75. We're at 2168.25 right now. What's really important about this is if you look at the, I can draw it in right here. If you look at the daily chart, there's like a little mini flag pattern forming. If you look at the weekly chart, this spiral to the downside and then extraordinary move up has not yet taken out the 2185 round number high. This is now the December E-mini. Actually, this is a continuous contract which has exactly the same price as the December E-mini. But this is really the issue. What is my expression? Rectangle formations can last a lot longer than your patience. And what are we looking at right here? This is the 120-minute chart. Remember that rectangle pattern that went on for a month and a little bit? Way back in October? Way back in October. Well, here we are halfway into November, and we've got yet another rectangle formation forming in the 120-minute chart with borders of 2180.50 and 2147.75. My contention is that we are having a digestive session today in the Dow. There's a rotation. Now we can go through the numbers. Let's do that. INDU. The Dow has had a spiral to the upside. The pattern that I'm looking at here is a little bit like the Chapman wave stalk leg formation. The only difference is it's kind of a rectangle formation that goes sideways, and then there's a break to the upside. That break to the upside doesn't always do it, but it can make a 1-to-1 to the upside. And if that 1-to-1 to the upside is in place, then we're looking at, here we are. Then we're looking at the move from 17,063 on June the 27th, the low, that ran up to the high at peak C on the 20th of July at 18,622. And then if we take the low of 17,883, it takes you up into the 19,000, actually 400s, but that's not the issue. The issue is that it takes you in a progressive move to the upside that essentially uses up tremendous momentum so that pullbacks are either more time than price until it makes its top. And we're at leg B with a potential peak B. We've taken out the low of the candle of yesterday. If we close below 18,815 in the Dow, says that we should go a little bit lower. If we close inside more towards the candle close of yesterday of 18,850, sorry, that's the same price, of 8,868, That'll suggest that we're going to go quite quickly to a leg C. If you look at the 120-minute chart, what I did is I went back to my subscribers. I was showing them this naked chart here. I decided that I would add it. I'd go back to the one that we had always been following that had the MACD, the moving average convergence, divergence right there, and the slow stochastic. Gosh, I forgot to put that in. So I'll just type it in here. MACD and stochastic. It's actually the slow stochastic, but I'll put stochastic. These are sets of moving averages, and they give me a tremendous amount of information. You'll see that in this one, the Dow, MACD is pulled back, the daily chart of the Dow is pulled back, and the green line, the fast moving average, it's the 9-period differential, I call it the faster moving average, has crossed negatively under the red one, the slow moving average. But it's just a narrow little close. The beta, the distance between the two is not very big, all right? Now the stochastic has started to pull back. It's way below where it was on the big breakout back on the 4th of November. It's just gently gone sideways to slightly down, and now it's at 83%. That is still good. And that's saying to me, and I'd say to subscribers, that the 9-period moving average in the 120-minute chart at 18,814 is going to be pretty much the support we want to watch. What's the low today so far? 18,806. Some of you might ask, what are these yellow circle fives? Over the period of the last year and a half, what I've done is I've used a particular modification of Elliott wave. In fact, it's just the concept of 5 waves now that is really Elliott wave, which kind of speaks to my Chapman wave methodology, which is 7 waves. But this is a little different. In this particular instance, if I'm correct, we've made a peak D in the 120-minute chart. Remember in the Chapman wave, always look for Ds. That's where you can get a top. That's where often we put a down arrow like we did right over there back on the 21st, I think it was, 24th at 11:30 when the Dow at 18,275.04, and then it came down. And then it made that Chapman wave 5. That was also an inside 1, 2, 3, 4, 5. So that's very interesting. And now, if I'm correct about this 5, there should be more of a timeout. And we're going to be watching this real closely, because if it spirals, if it uses time and then breaks to the upside, it's going to be something different. So that's what I'm looking at right now. I believe that the Dow is at a spectacular move, very quickly, 1,000 points up, and now it needs a little bit of a rest, a little bit more than 1,000 points, 1,000 points and 50. So what I'm looking at here is some kind of a modification to the rule that we've seen. And what is that modification? It says that now the Dow, which has 18,874 as starting leg C, if it happens tomorrow, not today, or the next day, that will start leg C. And the Chapman wave squash is the distance between the stochastic and the MACD is a technique I developed a long time ago, and that says that there should be a very quick, it's the torque, the first gear and second gear that you've got. And then the MACD has to be the turbo that takes over. And very often what happens is you go very quickly to peak A, to peak B, and to peak C with huge moves to the upside in that initial A and maybe even to B, and then C is a little bit higher. And then it takes its time, and the stochastic starts to pull back, and then the MACD takes over. Whoa, I used this whole first section I did the numbers. I've already done the numbers. I'm good. I'm going to go to Ben in Tallahassee as soon as we get back. Ben, hold on. I'll be right there. I just want to go through some of these different scenarios. I'll be right back with Ben in Tallahassee. You look at the GDX.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, Ben. Basil Chapman here, and you are on. And the question is...
Yeah, Basil, how you doing?
I'm doing well, thank you. How are you doing?
Excellent, excellent.
Good.
So, pretty wild market, no doubt about it.
Yes.
So GDX, this thing historically has just always gotten away from me, just given its I guess, and actually I play the nugget in the dust, and before you blink your eye too fast, it's already moved 5%. So always careful with those two. So I was thinking maybe just getting in the GDX this time, and with that strong leg A, I believe in the monthly. My thought was we might be getting close, especially as you said, the dollar could be making a leg D here soon. That maybe this could be a good time to maybe even take a longer term position in the GDX. What are your thoughts?
Okay, so let's look at a couple of things. Folks, I'm going to grab, instead of the GDX, which is the gold miners, because Ben brought it up, and there is a direct relationship here. The dollar today has a high of $11.25. It's got 16 cents. It's got to get you 11.52. 11.52 is what we're talking about, 16 cents. No, 22 cents. Why am I doing this? 26 cents. It has 26 cents to go, and then it makes a recovery high, and that recovery high will take away the gray leg B and turn it into an immediate leg D. So it's 20 cents away, and we're talking about the currency that you and I might play. Well, actually, I never play the currencies, but some people do. But that's got something completely different to volume that entire countries are placing money on. And that's like the bonds, that's like the euro, where you've got monster amounts of money coming in. So I don't see how it can resist not going up 26 cents to start that leg D. Now, I've learned over the years that there are times, if I'm using my shorter term time frame, in other words, if I'm looking at the monthly, I've got to be looking at the weekly. If I'm looking at the weekly, I really have to look at the daily. And if I'm looking at the daily, I need the 120-minute chart. When you're about to cross a key milestone in a very long-term chart, what would be a key milestone? A key milestone would be, doesn't even have to close. The dollar just has to hit $100 and 52 cents, the dollar index that is. And in my work, that starts leg D. However, if I drew it somewhere, I don't see it here now, so I'll draw it again. If I draw a trend line, just a slight gradient, that says that based on the gradient itself, the dollar could hit 100 point, somewhere in the 100.60s, and then it starts to bump up against this trend line, which is 1 year, actually, no, it's December, it is March of 2015. That was the original high of peak B at 100.39. Peak C is in December of 2015 at 100.51. Amazing. That one, 12 cents, and you got yourself a new peak, and then it failed and went to a lower low than the trough of B. And now we're potentially within seconds or a day or whatever it is, very close to making that leg D. Now, this is something that I learned over the years. When you're talking monthly charts, to anticipate that you're going to get a leg D to a peak D, you will find, if you look at enough charts, let me find some here. Let me go to Apple. Apple made a peak D. Oh, look at that. Yeah, so leg D in Apple, when it broke above 82.16, the high of December of 2013, that leg D went 1, 2, 3, 4, 5, 6, 7, 8. It went 8 months. On the 9th month, it confirmed the peak D. Are you getting my drift here?
I am. Wow.
That we have to wait for a peak before we can talk about the dollar as making something that could be represented as the reciprocal of the counterpoint of gold. In other words,
well, maybe a better question then is maybe assessing the low area of the GDX rather than the high area of the dollar.
Okay, so now, and if you don't mind, now I'm going to go, instead of GDX, just for the moment, I want to go to gold itself. The candle that's being attempted right now, so far is an extremely weak candle. The MACD is turned down decisively, and the stochastic is at 8%. In the 8% region, it's often started a turnaround. Let me just see what it was back in August on the daily chart. So we're going to this, 8.54%. So now we're looking at, so this is the range where gold has a chance to rally. But you know what I'm looking at? I'm looking at the weekly chart, and the big test is about to come because the close, 1209 was the low of the week of June the 3rd, the last major low. Then it formed this large arch formation. It's come back, and it's gone to a lower 1211. Okay, it hasn't gone to a lower low yet, so that's a good sign. So now let me think about this. A gold, dollar, and of course, this would just be the perfect time to be buying the GDX, because if there is even a hint that the dollar is about to go just like it has before, 20 cents or something above the previous high, and then turn around, gold should have a good bounce. So yeah, this is what I'm going to suggest. Do you have a position at all in GDX?
I don't.
You don't? Okay. So the candle that I'm looking at is a very nice candle. Unfortunately, the candle it's going against is the candle of 3 days ago, where the GDX on the 11th went from 2275 down to 2083. And that was 3 declining candles. That was the third, and then yesterday it went lower, but closed quite nicely in today's turnaround. So when I go to the 120-minute chart, it says, yeah, it could be a little bit of a bounce. So if I can suggest that you have a very short-term objective in the GDX, because the dollar is so close to at least getting to the level that we've been looking at, and if it gets there and turns around, I actually think the dollar's got more strength and it's going to go higher. I think that based on my A pattern, the Eiffel Tower, straight up, straight down, in the weekly chart, we've gone decisively below the low of the week of the 27th of May of 2194 in the GDX. I would only do this as a bounce. And if you are wanting to do that, maybe here at 2169, I don't like to have, when it's just a quick trade, I don't like to have like a 5% risk when all I'm looking at is the test of the 22.75 level, $1 higher, and then you have to see what happens after that. So I would just have a very small position. I know this is not kind of, I know that you don't mind trading short term, but you want action. And I know that you also like to put in a position for the longer term where you're prepared to wait a little bit. I just don't see this as being either. I see this being as a quick pop to the upside. I don't think the dollar is done. I'm just going to say to you that if you're asking me whether you should buy the GDX only as a trade in a small position, I wouldn't have more than, it's at 21.68. I wouldn't have more than a 40 cent, a 2% risk, not even a 2%,
no,
less than
good.
that.
That's good. No,
Okay.
I understand what you're saying. I appreciate that. And also, Basil, I do realize gold came down pretty hard. It's not going to turn around in a heartbeat, right? And just
I don't think so. No, I don't, unless the dollar really does turn. Hope that helps you.
Right. Good.
Thank you, Ben. Good question. Folks, we'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we had a couple of questions. Let me just do this now because that's what I wanted to do. Coal, KOL, this is the right there. Van Eck Vectors Coal ETF, folks. This is the left side is the daily. This is in the middle is the weekly, all notated with the Chapman Wave notations. And the Van Ector's Coal ETF, shows that coal's had a spectacular, after 90% decline, it had actually I didn't update it, as I said, 168% rally. It's actually a little more than that, but right now it is down 33 cents at 13.17. So this is the monthly right here, and then if I want, I can grab the 120 minute. So what we're looking at here is that spike high on the 9th that went to 14.74 is trading down with a low today of 12.83. So I'm looking at this and I'm saying coal is going to have a bit of a digestive phase right here, based not only, actually I could even do a Chapman wave 5 in the Elliott wave, or I call it Chapman wave, of course, because it breaks so many of the Elliott wave rules. Let me just show you what I'm looking at here. Make that the X, that's the low, color pink. And I'm just going to do this, if you don't mind, 1 second. And then a bunch of questions I've got to answer. 16. Here we go. Look at this. 1, 2, wave 3, wave 4, and there we go, wave 5. So I think there's going to be a bit of a timeout here. I think it's great action, but it is now quite overbought, kind of stalled away from the 200-period exponential moving average, this browny color right here, goldy brown. And it should consolidate. And I've already put that rectangle in. I put it in a little while ago. So I'm looking at this and I'm saying coal looks fantastic as we're looking at it right now. But going forward, I think it's going to be very choppy. So here we go. Looking at the coal, and the next question was JJC, which is the copper ETF. That is the IPATH Bloomberg Copper Trust, I think it's called, the ETN. And that has gone to an ABC. A lot of these stocks have done the same thing here. ABC. Look at this. There's an overlapping wave, Chapman wave, overlapping wave, ABC. And there we go. I got to change that back again. Darn. So here we go. Give me a second. 12. Set as default. Color blue. And we're all set. So here we are. So copper is saying the same sort of thing. It's F/B. I think it's going to be an F in the end. I'm not sure yet. In the JJC, trading at 28.71. It's only down 27 cents. Had a high of 30.28 just a few days ago. And now I'm calling this a D. Just for now, I'm calling it a D. And in the monthly chart, it's in leg B. So all of these, the stocks, the ETFs that we've looked at is JJC. Is the IPATH Bloomberg Copper. So I thought that was a question. So copper says it's going to have a little bit of a pullback here. So the CCJ right there, is in leg A right there. B, C, D, having a little pullback, and that's Chemical Core. Chemical Core, wasn't that in oil sector, if I remember correctly? Am I wrong? So Chemical, Core trading at $8.95, up 8 cents. Valves and filters. Okay, valves and uranium. Which one's uranium? CCJ is uranium. Oh, okay. Yeah, it's a start. If you're long, I think that this is a really good long for right now, especially if you've been in for a little bit. Most importantly, it needs to hold $8.47 to $8.39 as key support levels. 861 is the 9-period moving average. But my suspicion is that if it does pull back, the MACD is very strong. Stochastics at 84%. If it does pull back, 861 will hold. But if it goes under that, then you're really looking at that 847, 839 area. That's going to be very important because that messes up the weekly chart from looking really strong as a takeoff right now with the MACD and stochastic. I'm just going to say that if you are long right now, I think you can hold it. One position I would have a stop. It depends where you got in, but I would definitely not hold it if it closes under 838, 839. I'd say one position I would take off, and I'd keep the other position, get ready to put the other one back again, just because it's had this arch formation, really nice cup formation formed from that, and it's done everything that you want. It failed to take out the left side high of 916, but boy, it went right up to 910. That's pretty darn good. It just needs time. That's the way I'm looking at it right now. Like a lot of these charts that have come off major bottoms, sometimes they have to do this H pattern to retest, and that was a very successful retest. Look at the way the MACD and stochastic held. So would I add to this? I would say that if it pulls back from 891 and starts to test the 872 to 861 area, that's when I would do a little bit of buying, but I would probably say a close under 839, I'm out. So that's the way I would look at it. CCJ. Okay, now a bunch of questions that we've got right here. Let's start with this one. $3 move up in crude. So this is the same sort of thing. You see, crude, the same as the GDX. Crude had a very sharp pullback. Is it suggesting that the dollar is really close to making some kind of a high like it had before? Could very well be, but you've got to use the daily, then the weekly, and the monthly before you can talk about a peak D in the monthly. So we have to look at the dollar in a different way. If it breaks into the 101.50 area, I'd say be careful with gold. Be careful with some of these commodities. At the same time, if it just fails here and it starts to break down and closes down 1.5 points in the next 2 days, then I have to look at it and say, same story as every time. Is it going to repeat the same failure mode? We'll see. So in the meantime, this is leg A, gray A in the crude oil. Big question is, all right, do you buy it now? Or do you say, let's be a little careful because the dollar might not have finished its move to the upside? I'm going to err on the side of caution, but I am going to say that the crude oil chart is a lot better than the other charts I've just been looking at. It's in a consolidation phase. And if it's able to hold this rally, and by tomorrow it's able to take out this high, the high of the 9th of November of 45.95, there's just no question in my mind that I have to be very much more positive and say, wow, that weekly chart, the MACD is kind of holding well. Stochastic needs a lot of work in the weekly chart, but the daily is starting to form higher lows in the stochastic as the prices come down. That's a nice positive divergence. Just would not get carried away. So let's look at the USO. The question would automatically follow, I believe, that if crude oil can rally, then there's an island reversal. Well, I'm going to put in an island reversal, but on these commodities, anything that trades overseas before we do is bound to have some kind of a bounce. So in the meantime, let's look at this and say, USO, it's the same story. If it's able to close above 10.37, that's going to be a nice move, and it'll take you to the 200-period simple moving average at 10.56. So yeah, if you want to just nibble, you could do that, but realize you're at the risk of the dollar suddenly spiking up. That's all I wanted to say. So, and also what I would do if you're in the USO at 10.22 right here, I would make the stop 2 pennies below today's low of 10.08. No, I wouldn't even do that. It would be 2 pennies above. No, I wouldn't even do that. I'd make it very tight. Yeah, I would have a stop of about 12 cents right now. I wouldn't want to mess around. Folks, we'll be back. Dow's down 40.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Couple of questions there. Okay, so let me just do this. So the question is, Bob wants to know about Bank of America. So Bank of America, BAC, has had a spectacular move. I got it in leg E right now. The MACD is just up tremendously. Of course, it's gone from the 15s to the 19s. It's, I mean, let's face it, 5-point move on a $15 stock, 33%. So what we're looking at is the stochastics at 95, and that is fabulous. But what's really terrific about Bank of America is that the weekly chart has broken out. I'm calling this a brand new leg B. This is the B. It's a leg C. And that's just saying to me that there's going to be higher prices to come in the bank stocks. And it was really hard to jump in. I kept wanting to jump in every day, and I just said, I don't know if I can do it. And of course, that was the wrong thing to think. That's the one thing about Kramer that I learned years ago, that he has this way of looking, and he says, it's not where it's been, it's where it's going to. And that's sometimes very hard to do, because you're talking about, for yourself, I don't mind jumping in and having, if my goal is to look much higher. But for subscribers, I always like to put in tight stops, and we tend to make it up with the big moves on stocks like one we have that's down 26%. But that's also, it's really tough. But what we're looking at is Bank of America right here. Because it's going to go higher, it's had such a big move that if you bought it in 1986, and it did have just a normal correction of, say, 12%, let's say 12%, that's a lot of risk, because you got to say 12%, but it's going higher after that. Maybe it's 4%, maybe it's 22%, maybe it doesn't even have that. So my big question was, do I just jump in and say to subscribers, buy it now, we'll start a small position, and we'll add to it on big dips? Well, yes, that's one way to do it. Sometimes we do that, but it's also where it's very dissatisfying. It's nice to have the position, but you really want that pullback. And I think we're getting ready for a pullback in the bank stocks. So the answer to the question, Bob, is it a short? I really am loath to short one of the strongest sectors. I'd rather be saying, hey, I want to be buying. I don't want to be shorting. So I'm just going to say to you, if you're asking my opinion, if you're looking at a 2-day trade or 3-day trade, I have no problem whatsoever going to the 120-minute chart and saying, peak, let's just say it's a peak F right now. Yeah, you could short it now. Be ready at any second when you're shorting a strong stock, especially one that is the leader of one of the leaders. That it's mentally you need to have a very strict discipline. I would rather say, you know what, miss that. I'm waiting for $18.50 to start a small position, and I really would love $17.50 to make that position much bigger. That's just the way I would look at it. And I'm not talking about shorting. If you are going to short it, just put a stop 1 penny above the high of yesterday, which is 2020. So 2021, you've got yourself a less than a 40-cent stop. You could short it now. I'm dead against it. I'd rather say this is one on my list to be buying. So Bob, I hope I helped you there. I'm also going to do, because the question came up about JP Morgan. Look, JP Morgan, it's all the same thing. JP Morgan, A, B, C, D, E. Oh, this might have recycled. F, G. Yeah, JP Morgan, it's the same thing. Weekly chart. I don't know if that's an F or a G. Let me just do 69, 77, 78. Okay, this is, I don't really want to call it an F. It doesn't have the characteristic of an F. It looks like more like an F/B. Okay, so I'm just saying to you, JP Morgan at 78.11 could pull back 3 points, 4 points, 3%, 5%. That's fine. If you want to short, my thinking is that I want to be looking at these on a decent pullback. I would like to be buying them. That's really my attitude right now. Next question is the UAL. You know, these airlines have been on an absolute tear. Are they talking about the economy? What are they doing here? So this is E/A, this is F/B. For now, for today, I'm calling this an F. It has all the characteristics of at least a short-term top. Would I short UAL, United Continental Holdings? No. Would I want to buy it? Well, it's a 67.70. I would rather just patiently wait and see if it can come back to the 61.59 area over the coming 3 weeks or so. And then I'll say, okay, I'll be ready for the next big move up. I think after this major move, that these banks and the airlines are actually going to take a little bit more time and disappoint people by taking more time than they think to consolidate, because this is an emotional move. Trump isn't even in office yet. This is an anticipation. So the IYT is the next question. The IYT is in leg D. So everything's the same thing. We're getting close to some kind of a consolidation, but these are powerful stocks. They're breaking out of resistance areas. Some are breaking out to new highs. I'm just saying that at this particular point, have patience to rather be buying than to short. If you are able to short, let's just say you shorted right here, the IYT at 157.33, 159.26 is my buy stop. 1 penny above the high of today. It's just got to work immediately. And my thinking is rather be looking to buy. Okay, next one is BZH. GT wanted to know. BZH had a spectacular move going from the 960s to the 12s. Another one of those 30% moves. Pulls back huge this morning, huge. And it goes back to $10.15 from the high yesterday of 12.10, and now it's closing. It's almost at the high of the day, not the high of yesterday, but the high of the day at 11.07. The high was 11.15. I think it's telling me that, it's telling me that. Let me just show you something here. That interest rates are going to be impactful for the housing market in the shorter term. I'd be a little careful. And look at this. You've got a doji candle at the low of the TLT trading at 122.37 up $1.06. Went under the 200 period moving average in the weekly. The monthly chart really looks like a peak E. It's not going to take much for me to say that was a peak E, major top. And the TBT is trading with the doji candle yesterday and under it, and took out the low of yesterday. If the TBT closes at 39, under 39.03, it's coming down, and TLT could rally somewhat. But this is a very delicate area right here. And we've got that. Look, we've got the $1.20 or something away from a recovery high to leg D. You've got the TLT in a major support area, just under it actually earlier, and now it's right on the 200 period moving average. The MACD and stochastic are flat. The MACD's weak. The stochastic's flat in the daily chart, and that suggests that you could have a rally, but you're going to come back and retest. If I look at this spiral to the leg E, right to that. You remember that line I drew yesterday in my triple yield chart of the 30-year? That's white. 10-year T-note yield. That's brown, and this light blue is the 5-year. They're in F/B, and this is E/A. I don't know if this can really be an A. I think we're in for a period in the next 3 days or so of an incredible amount of information, and I'll tell you why. If the yields which had a high, if the 30-year yield, which had a high this week so far, 2 days, right? Not even, 1.5 days, of 29.31 hits 30.60 this week, something else is happening. It's going to break that high of the 13th, the week of the 13th of November. 31.40 is that high. That's the way it's looking. But if it has a sharp turn down and the TBT pulls back, then we're looking at the transition phase here. I'll talk about that when we get back. Basil Chapman, Tokyo Technicians Hour, and I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So, folks, the 10-minute chart, just in this last little segment, what we're looking at here is a little double top. Got to watch it closely. We retested the 2169s. I drew in the arch formation and finished the cup formation right on the button right there. Look, left side, right side, price time match. And now if at any point in the day, if the 2165 support goes, then I wouldn't be surprised if the market does close a little bit weak, taking a bit of a breather. But the rotation says, yeah, this incredible market has had a rotational bias ever since the summer of 2010. You remember I said, something here is so different. We were actually along the very day of the low of on March the 6th. We bought the diamonds at 66.50, I think it was. And I kept thinking I had to do a retest, and it didn't. It kept going higher. And then in the summer, I said, wait a minute, we should have had a huge retest. Instead, there's a rotation. Every time a sector gets a little overbought, another sector takes its place that had been hit hard and has a bit of a rally. And that's how this market has been. We only had one 22% correction that April of, 2010? and then it just came back up. So yeah, the rotation aspect has been really important. So let me go through this. I was asked about the IYR. That uppercase A that says Eiffel Tower pattern goes straight up and straight down. It's testing the 200-period moving average. The IYR is the iShares Dow Jones US REITs index, and it's trading at 74.33, down 17 cents, taking a nice bounce from the 72 level just a few days ago. But you've got to watch this closely, because the power of the down move is such that there could be a little bounce. I would not be surprised if it tests the 72 area again, and in fact it goes to 71 to 70, and that's the big test coming there. Way off the low that was made at about 66 earlier this year, but a little lower because it needs time. So that's what I'm looking at for the IYR. So here we go. My question is this, and I'm going to spend the week, I'm not going to rush, there's absolutely no rush to answer it. I'm going to spend the week trying to answer it. And the answer, and the question has to be within the context of, let me put the Dow chart up as I do this. INDU. Because we're in leg D at a bit of a resistance level in the monthly chart of the Dow, because this is an F/A in the weekly chart, because it's a B, peak B, if there's no new high today in the daily, it all suggests to me that we've got, let's say there's a rally to a new high tomorrow to 18,874. That'll be leg C. Let's imagine that there's a pullback Thursday, and then Friday we go to a D, or Monday we go to a D. How this market comes off after this emotional response, as I say 2 months ago, before we get the new president. So this is all anticipation. There's no fact whatsoever. It's just hope. I'm suspecting that this is a move that is an initial move to give a really good sense to say I am correct in saying in the Chapman wave methodology, leg C should come above 2193.81 in the S&P, which says it should still go to a D. So I am looking at this as being very positive. Can't be before 2017. So I'm positive going into 2017. That's number one. Number two, the VIX index is saying to me, hey, don't get too carried away. We did have that major move to the upside. And usually after a major move to the upside, there's a period where we just don't do anything. In fact, we just make lower lows and lower highs in the VIX index. My suspicion is that the VIX index is getting ready for one quick pop to scare everyone. And that pop can go from the 1370s where we are right now, maybe to the 15s. Doesn't even have to go higher than 15s. 15s will scare everyone enough, but maybe 15s to 16s, and then it comes back down again. It doesn't close above 1643, the 200-period moving average in the weekly chart. So that's what I'm looking at. So all in all, still very positive, trying to get some buys. I got to be a little careful thinking if we've got another 4 days to go, 5 days to go, then we might make a peak D and have a little bit more of a pullback. Then I've got to be looking at this as rotational, in the corrections, etc. And that's the reason why I'm saying if you wanted to nibble at those indexes that just are slightly turning up now, maybe this is a time, but be careful. Just be real careful. Basil Chapman signing off. I'll be back tomorrow. Have a great day and stay tuned for your swimming lesson and all the rest.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.